In 2022, the credit card debt in US jumped to $930 billion, which is 15% more than 2021, and it's the highest jump in more than 20 years. And this not only includes the new debt. According to a report by creditcards.com, 60% of Americans have been in credit card debt for more than a year. With the rising interest rates and inflation, average interest rates on credit cards rose to 19% in 2022, from 16% in 2021. And due to the not-so-good job market and unstable economy, this debt can increase even further in 2023. But did you know that these modern-day credit cards were started only as a charge card to eat at restaurants and pay off the bill at the end of the month? And even when charge cards evolved to modern America's credit cards, still the interest rates were just 4 to 5% as compared to today's average of 19%. In this video today, we'll talk about the dark side of credit cards, how credit cards evolved and became almost a necessity, and how it gave rise to $1 trillion of debt in US. In this world where even the air and water are not free, why do banks and retail companies give you credit cards for free? And some of them don't even do credit checks. How some people get trapped into this modern day slavery, and most importantly, how you can save yourself from falling into this trap. So stay with us through the end of this video and we'll debunk many myths surrounding the credit cards. The credit card history goes back to 1949 when a businessman from New York named Frank McNamara went for a dinner, and while paying the bill he realized he forgot his wallet. Though his wife paid the bills that day, this incident gave him the idea for a card that people could use, sign and then pay later. That's when he created the first credit card company called the Diners Club in 1950s with Rolf Snyder. But this was not truly a credit card. Instead, it was a charge card that required the cardholders to pay the entire balance of each month. When Diners Club was founded, it had only 200 members. That grew to 42,000 in just 2 years, and card could be used in US, UK, Canada, Cuba and Mexico. After this, the credit cards have evolved over the years. Bank of America was the first bank to issue the first general-purpose credit card, followed by other banks like American Express, Chase and Capital One. These cards allowed users to carry credit balance month over month and pay minimum balances. Though initially there were a lot of regulations in the US for increasing the interest rates, and credit card companies were only charging 4 to 5% of interest rates. But after some time, few state governments started removing these regulations. Then banks started to move their branches in those states. But by early 2000s, all regulations have been removed from late fees and interest rates, and banks were given the free hands to dominate this space. Since then, the interest rates have increased many times. Today, the average interest rate in US is 19%, with some banks charging up to 25%. Still, the question is why people are paying this much interest, whereas the other traditional loans are much cheaper. But before answering this question, if you have enjoyed the video so far, please smash on the like button, and if you are interested to know more on the business stories, please subscribe to our channel and click on the bell notification so that you never miss a new video from us. Thank you. The credit card industry also gave rise to many other industries. To support this system, play safe and make more money. The first system created right after the credit card was the network companies like Visa and mastercard. If we go back a few years when we didn't have online banking and online money transfers available, we used to go to banks to withdraw and transfer cash. But the problem was that these bank branches were not available at every place, and we could not withdraw money from other banks. Although at the back end, these banks could have shared their data and let people avail any bank facility to transfer and withdraw money, but banks were afraid to share their customer details with the competitor bank. So banks formed a consortium, and that's how these network companies were started. These network companies worked as trusted interbank payment and transfer gateway, and banks were able to expand beyond their physical locations. Today, these companies have details about every transaction and personal data of banks' customers. Though in some cases data is constrained by the country rules, for example, for all the US customers, Visa and MasterCard cannot store their data outside of US, which means their data centers must be in US only. The credit card also gave rise to the business of credit bureaus. Although the credit score system existed for a very long time, but the FICO scoring was created in 1989, and all credit card bureaus started using the standard formula since then. Today, Equifax, Experian and TransUnion are the major credit card bureaus in US. Another business that rose from credit card is the theft protection agencies that protects you from the online fraud of data. These companies can prevent the access of your personal information like name, SSN, bank and credit card numbers, or restore your identity if you are already a victim. Some famous companies are Identity Guard and Identity Force. Another business is for building the credit score with companies like Chime and Credit Saint. Now you might ask that it is good that these many businesses are created out of credit cards. Yes, that's true. But deep inside, if you see, all these businesses are connected to create the credit card trap to keep people in debt. Credit card interest rates are so high because the share is going to many parties. You know about the transaction fees to the network companies? Every retailer has to pay a 3 to 5% cut to process the payment using credit cards. And that's why retailers also inflate their prices to match these fees. Some retailers give you a discount of 5 to 10% if you pay using cash. Also, if you don't pay the balances each month, then your credit score will decrease with these credit bureaus. And then if you want to take any other type of loan, you might not get it because of your bad rating. Then you have to go to the companies like Credit Saint to build your score again. So this system is like a trap. Once you are in it, it is extremely hard to get out of it. But this is only a tip of the iceberg. Deep inside, there is a more complicated system of data. If you have not worked with any credit card company, you cannot even realize what companies do with your data. They do the profiling of your data and sell this data to many parties. There is a multi-billion-dollar industry created behind this data. I am sure many of you must have received the calls from the credit building companies and other finance companies for personal loans. Now, when you are in debt and if you are getting a call for a personal loan, you can guess from where they are getting this data. If I start talking about this business, it can be a video in itself. So let me know if you want to know about the data selling of banks and credit card companies, and I'll create a separate video about this. A credit card company's worst nightmare is a customer who pays off their debt every month because they get all the benefits without paying the interest. And that is why the credit card companies create a trap for people for making it easy for them to overspend and rack up the debt. They can trick people into spending more money through a variety of tactics. First, credit card companies offer low or 0% interest rates as an introductory offer, which can make it easy for people to overspend in the short term. Some credit card companies use pressure tactics such as encouraging people to act now or limited time offer only, which can make people feel like they need to buy something now even if they don't need it. Some companies can also be opaque about the terms and conditions of their cards, such as annual percentage rate, fees, and penalties, which can make it hard for customers to make informed decisions. On top of all this, credit card companies often set low minimum payments, which can make it easy for people to just pay the minimum and continue to rack up the debt. Credit cards also have much higher interest rates than other forms of credit, such as loans, which can make it difficult for people to pay off their debt when they are already struggling to make the payment and only paying minimum balances. In fact, some credit card companies use marketing techniques to make people believe that they need to have a certain lifestyle or own certain things, which can make it difficult for people to resist the urge to overspend. And that is why it is important for people to be aware of these tactics and use credit cards responsibly by setting a budget, keeping track of spending, and paying off the balance in full each month to avoid the interest charges. Well, as everything has both good and bad aspects, by all this we don't mean that credit cards are bad. You can use them for your benefits as well, and these companies will never make any money from you. We cannot deny that credit cards are a convenient form of payment. They are widely accepted and can be used almost anywhere. And responsible use of credit cards can help you build credit history and improve credit scores, which can make it easier to qualify for loans and other forms of credit in future. Many credit cards offer rewards and benefits such as cashback, travel points, and other perks for using the card. These rewards can add up over time and can be a great way to save money and get discounts on purchases. Some credit cards offer travel benefits such as rental car insurance, travel accident insurance, and lost luggage reimbursement, which can save money and provide peace of mind while traveling. Many credit cards offer purchase protection as well, which means that if an item is stolen or damaged within a certain period of time after purchase, the credit issuer will reimburse the customer. Credit card companies also have fraud protection measures in place, such as monitoring transactions for suspicious activity and providing zero liability for fraudulent charges. That is why it is important for you to use credit cards for your benefits, not for banks. And the only way to do this is to educate yourself. So that's about credit cards today. Let us know what credit card you use in the comments below. If you have enjoyed this video, please do like it. If you are new here, please subscribe to our channel and help us grow. We are trying to bring more amazing business stories to you. Also, let us know what other business stories you would like to see. With that said, I shall catch you in the next one. Thank you and have a nice day.